So Eva, what's going on in your life?
First, no school,
Uh-huh.
homework,
Uh-huh.
and lots of reading.
Why no school?
Because of the coronavirus that's going on right now, they don't want it to spread, so they canceled school for the rest of the year.
Wow, so you're having a lot of fun?
Mm-hmm.
Are you doing any work at home besides your school?
Yeah, making a video,
Okay, what else?
writing some blogs,
And
and coding a little.
coding a little? Okay, what are you writing on now?
Oh yeah, we're writing we're writing about my portfolio.
Ah,
Yeah.
okay. So what's going on with your portfolio?
It's not been doing very good for the past maybe 2 weeks.
And when you say your portfolio is not doing very good, what's going on?
So the coronavirus caused the stock market to go down, and so my portfolio went down, but it's okay
But why didn't you sell before it went down, the market?
because you cannot time the market, because so the market only has, like, in history there's only been a few days where the market's gone up a lot. So if you miss those days, then your portfolio won't really grow as much as it could. And history shows that the markets generally go up more than they go down.
Okay, and so first of all, where did you get the money from?
Helping you out.
And helping me out, so I pay you some money. And then what do you do with that money?
Invest it.
Okay, and what have you invested in?
So I have not invested in individual stocks because individual stocks have too much of a risk. So if the company goes out of business, I lose all my money, and I don't want to lose all my money that suddenly. So I invested in ETFs, or exchange traded funds. So basically I buy bundles of stocks, so that way there's a less risk, and if one company goes out, it doesn't affect my entire portfolio.
So bundles of stocks means you own a bundle of businesses,
Yeah.
right? What kind of businesses do you own?
I own like international businesses in emerging countries, in developing countries, businesses in the United States, small businesses, large businesses, basically everything.
Everything?
Company that's public.
Oh, okay, public trade. Okay, well, what about private businesses? Why can't you own private businesses?
So private businesses are private, so you cannot buy a share in them. Buying a stock makes you a part owner of the company. So private businesses, they don't let you buy stock in them.
I see. So why don't you limit your ownership in businesses to United States only? Why do you have to go out? Why would you want to own businesses in, say, China or India or Russia or Europe or wherever?
I guess having a more diversified portfolio is better because you can experience all the different markets.
So some countries might be good at something.
Yeah.
They might have a different political system. They might have a different economic system. They might be at a different stages of their economic growth. You want to capture all those things, right? So what about United States? Do you know any history of United States? Say you go back 100 years. How was this country?
100 years ago was the Great Depression.
No, that was in 1929. So 1920.
1920.
Was it a developed country or an
Not at
emerging
all.
market?
It was developing.
Okay.
Now we are a developed country.
Okay, so it was just starting out. It was forming all the structures, all the institutions, all the businesses were getting formed. So similarly, other countries in other economies could be going through that same phase.
Yeah.
And you want to participate in that growth, right?
Yeah.
So you basically own international businesses because
so you can like capture all the different markets, and like certain countries are better at certain things and they're developing, so
you basically want to participate in the growth of capitalism all over the world, right?
Yeah.
Okay. So you own stocks, mostly stocks?
Yeah, I own stocks.
So you basically are an owner of businesses
Yeah.
in companies all over the world.
Yeah.
Okay. Why not bonds?
So a bond gives like a less return. Like difference between the difference between a stock and a bond is in a stock you become a part owner of the company, but in a bond when you buy a bond you lend your money to the business and they pay you some interest in return for lending your money. So you do not become an owner of the company. And in a stock you earn like your rate of return is higher because any profit that the company makes you receive in dividends.
I see. And why would a bond be only why would a bond income not go up over time?
A bond income would not go up because you like the money you lend is only for the company to use.
So the bonds pay you interest, right?
Yeah, the bonds pay you interest that's fixed.
Okay. So you basically, when you bought that bond, you decided that you're going to the company decides a certain interest rate, and it comes to you saying that, hey, you want to buy this bond or not?
Yeah.
Right? And you will get to choose as an investor, as a saver, okay, to decide as to what you want to invest in, right? And sometimes you might not be attracted to a particular investment, right?
Yeah.
Okay. So let's talk about bonds a little bit more. Okay. So why would you not want to own a bond at this stage in your life?
Okay. So since I'm young right now and the main reason I'm investing is maybe for retirement, right? And retirement is far away, right? Maybe they're 40 to 50 years away. So I can put my money in the stock market for a high return. But people who are maybe approaching retirement and are very close might not want to put all their money in the stock market because maybe it drops like this. But in the bond market, your money is more secure.
So what if it drops like this? Like what would be a problem for someone who's close to retirement, and if the market drops like this?
So before the market dropped like this, maybe their hopes were really high. The market was going good, and then so suddenly they lost all their savings. So it might not be enough for them to retire comfortably.
By the way, do you lose anything if you don't sell?
No. Right?
Okay. And why is that? So you cannot time the market.
Yeah, you cannot time the market.
And you don't lose anything if you don't sell. So how do you time that sale? How do you know when to sell? Because eventually you have to use that money to live on, right? Basically what you're doing by investing is you're deferring consumption now, right?
Yeah.
So if you had $100 and if you spent all $100 and you keep doing that for 10, 20 years, right? At the end of that 20-year time frame, you will not have anything to show for it, right? Because you've been spending all that money, right?
Yeah.
As opposed to taking some amount of that savings or that income and setting it aside into a portfolio which grows over time, hopefully, right? And why would you want to do that? Because when you retire, you want that portfolio to support you through the rest of your life, right?
Yeah.
So that's the point, right? So you at some point you will want to touch that money, right?
Yeah.
And that would be the point where you would want to start getting a little bit more conservative in the way you invest, right? And what does that mean?
Being conservative? Minimizing your spending on what you don't need to buy, I guess.
So that's one thing. That is controlling your lifestyle, right?
Yeah.
I'm talking about being conservative from your portfolio perspective.
I don't know.
You would start adding more bonds, right? Because bonds are not as volatile, right?
Yeah.
So you would want to. So now you own an all stock portfolio, right? Eventually, at some point, you would want to switch to a little bit of bonds along with stocks, right?
Yeah.
And you might actually own at some point real estate. Maybe if you if you start your own businesses, someday you will start your own company, right?
Yeah.
Or start your own business, right? So if you start, you might actually get into a different kind of situation if your business becomes successful, right? So there are all these different factors, and that's why at this stage in your life, you can be an all stock. You can be in an all stock portfolio because
I have a long time,
and
I can afford to take those risks.
And you don't need to touch that portfolio to live on, right?
Yeah.
Because who pays for everything you have?
You.
Huh?
You.
Okay, so you don't need to worry about putting food on the table, paying a mortgage or a rent, and so, right?
Yeah.
Plus, you get to buy all this fancy stuff, right?
Yeah.
Every day, every time.
Yeah.
Okay. And now, what else do you want to say? Something else? What about folks who are in 30s and 40s?
30s
Like,
and 40s.
would they want to? Should they worry about the fact that the markets have declined?
Probably not. 30s and 40s. You still have 10 to 20 years to retirement, and that's still a long time.
For markets to historically recover, right?
Yeah.
And during past pandemics, during past epidemics, we have data showing that eventually things recover, right?
Yeah.
And they have to recover. Why do they have to recover?
Because if the market just keep dropping, then we're back to the start where we started, like farmers.
Okay, so we're back to there is no point worrying about it because things would be really bad, right? So regardless of what you do, right? So there is this incident I know. Did I tell you about this? Where have you heard about something called a Cuban Missile Crisis?
No.
That was in the 1960s, early 1960s, during President Kennedy's term. Have you heard about that? Have you ever read about it? Okay. So United States and Russia, USSR at that time, were almost at the brink of a nuclear war, right? Where so there was this young trader on Wall Street, right? And he was trying to place a trade, okay? And the story goes that he asked someone who was more experienced, who had been around for a long, long time, as to how should he bet. Should he make a trade on the long side? Long side means like a few years down the road, or the short side. And the theory is that when you bet long, you have a higher chance of making a lot more money than when you bet short, right? So the older guy said that you should bet long, because if that Cuban Missile Crisis turned into a nuclear war, it wouldn't matter because there will be nobody to collect that winning from if you bet short, right?
Yeah.
Because the other counterparty which you are going to trade against, because every time you buy or sell something, you're trading against a person or a company or an institution on the other side, right? So if the world did fall apart, then it doesn't matter, right?
Yeah.
So you might as well bet. And that's something, I'm not sure whether you got a chance to read. I wrote on something called a Pascal's wager. Did you read that?
No.
Okay, maybe you should read that. So what that thing tells you about is also the same thing, right? Is to if things don't recover, there'll be worse things to worry about.
Yeah.
So you don't want to worry that much about things never recovering, right?
Yeah.
So you always want to be investing is all about being optimistic. Okay, it's about you have to have some amount of optimism.
Yeah.
And that's when you and these are the times when you take advantage of market declines, and these are basically the times when you can get more opportunities to invest your money. Okay. Anything else you want to say in closing? No. Okay. Anything else? No.
No.
Okay.